Hello, everyone. Welcome to the show. Our whole theme this month has been about financial freedom, and we are going to discuss what financial freedom is for each of us, Jonathan, Wendy, and myself, right after this. Greetings, everyone. Bill, Wendy, Jonathan. We are Carolina Capital Management, and thank you so much for joining us on the Real Estate Investor Show. Hard money for real estate investors. What?
You've been running up the steps. You can't get your breath.
We have been running around a lot. We're getting ready to leave for the Quest Expo.
Yeah, I'm
and
excited.
So we're trying to put all of our stuff together. So where was I?
Who are we and what do we do?
We are Carolina Capital Management. We are lenders in the Southeast for real estate professionals. So if you have a project that you would like us to take a look at, go to carolinahardmoney.com and click on the Apply Now tab. If you are a passive investor looking for passive returns, click on the Accredited Investor tab and get all the information you want there. We would also like for you to like, share, subscribe.
Tell all your friends.
Hit the bell.
Like, hit the bell.
Anything else?
That's it.
Wednesdays with Wendy.
Yeah.
Yeah, nope, not yet. We have a question and answer thingy on the side or underneath.
Oh, yeah.
If you'd like to talk to us during the show and after the show and leave wonderful comments.
Because we do monitor
not the
it
bad ones.
and we answer questions. So
Yes, we do.
Yeah.
Mm-hmm.
Oh, excuse me. Don't forget about Wednesdays with Wendy.
Yeah, now he says it. No, you're good. That was cool.
We won't go there, but that was a neat little graphic, wasn't it?
Yeah, it was.
As I was saying earlier, we're on our way to
Quest Expo.
Quest Expo.
Mm-hmm.
Which is in Houston, right?
Yes. I was waiting for the
Mhm.
final Quest Expo graphics.
Okay.
Also, Emmett Smith will be
I'm
there.
excited about that. I really
Yeah.
like him. He's
Yeah.
pretty awesome.
Yeah, I got to meet him about 5 years ago at another conference.
I forgot
he's
about
been a
that.
real estate investor for many, many years. So he's not just there because he's a pretty
He's
face.
not just a pretty face. He's a smart guy too. That's
Mhm.
awesome.
By the way, the Wednesdays with Wendy, you can get on her calendar because she's usually booked up a couple of months in advance. And it's going to be over there in the comment section. So just click it on and get on her calendar
Yeah.
there.
Yeah.
So if you haven't got your tickets yet for Quest Expo, I'm sure you can get them
It's not too late.
at a discount with using our code,
Yeah.
but your airline ticket's probably going to be pretty expensive.
Yeah. Unless you're already in Houston.
Because
Or close by.
yeah, or you could drive there.
Yeah.
All right. So let's get to breaking news.
The sky is falling.
How many of you have surround sound on your device that you're listening to us from?
I was going to say,
Sky is falling. Stocks are falling.
the Fed
rates
raised
are up.
Fed raised at 75 basis points. Volcker is proud. Volcker is he was the chairman from the early 80s.
Okay, yeah.
It's been a while.
So here's to sum up our breaking news. Rates are high, stock market's low.
To sum up, rates are normal.
Yeah. Yeah.
Rates are normal. They're not high.
Higher.
They higher than the historic low of 1.95%. Yes.
But and people need to remember that when the Fed raises the rates, mortgage rates usually drop a little bit. So
the average just crossed the 6% to 6.02.
Oh.
I know. Well, I mean, it's up from 1.95. So you're sitting at right at 6, and
So the Fed chairman in his comments and press conference afterwards basically said, we're going to have another 75 basis points raise in January.
Mm-hmm.
They'll, at that point, they're going to let the data see where it goes. But
They want to see
frankly,
prices
they're
come down
in-
on everything.
Yes, but
That's the point.
they're looking at 2025 before they think
Rates
we will be out of a recession,
Oh.
so to speak. They keep saying they don't know whether it's going to be a recession or not, but it's going to take
We're
until
there.
2025 to work this through the system. They want to have a higher unemployment rate, and they want.
We're not sure if it's a recession, but if it is,
That's what we
it'll be
want.
2025 before it's over.
Yeah.
But we're not saying it is.
It's gonna take them a while to move all this thing through the system. That
Yeah.
said,
They want prices to come down. That's the bottom
I'm
line.
pretty old, and I
Yes,
have lived
yes, you
through many a downturn. I remember before I even got my driver's license, sitting in the gas lines. I bought my first house when Jimmy Carter was president.
Oh, I thought they were on Steam at that point.
But pretty much, my whole point to this is it's not the end of the world. You just have to manage your expectations.
Got to roll with the changes. Should be a
And
song.
there have been real estate investors when rates are high. There are real estate investors when rates are low, when prices are high, and when prices are low. That's the thing about being a real estate investor, is that you're a problem solver,
That's right.
and there's always going to be problems,
That's right.
right?
I don't know. Sometimes I feel like I'm a problem survivor.
It does
You're
feel
a-
that way
You're a
sometimes.
problem creator.
Well,
But if you know how to create them, you know how to fix them.
Yeah,
Right?
he's
Yeah.
just practicing, putting up
That's-
practice for himself.
that's right.
So our theme this month has been, financial freedom, how to get there.
And before, I'm
Freedom
sorry,
numbers. Go ahead.
before you get there, just to give a little more backstory, or not backstory, a little more data. Like for the inflation numbers, we are using inflation is measured year over year. So
Mhm.
it's August of this year to August of last year. Well, we didn't see inflation above 3% until October of 2021.
Right.
So this October, when we can compare those first inflationary numbers to the year over year, that's going to give us a better idea. It's going to give the Fed a better idea of what's going on.
Right.
Is it staying around 7 to 8%? Is it 9, or is it 2? And if those numbers come out and they're a lot lower, then that rate probably won't happen. That rate rise won't happen in January. But with 3.5% unemployment, 11 million jobs still unfulfilled, everyone's fighting for talent and I'll use the word overpaying.
What is everybody doing for work? I don't understand.
Yeah.
Where did all the employees go?
Well, and so everyone's fighting for new employees or the hire, and they're overpaying. And it is overpaying.
Oh yeah, no doubt.
And that is one of the key ingredients to inflation.
Yeah.
And that's one of the key ingredients to the inflationary numbers and why they're so high is the income, or I guess the average salary or monthly wage has increased dramatically in a short period of time.
$15 to flipping a hamburger, that's pretty strong.
Well, to me, it's the energy. That's what's causing inflation. Energy is a part of every
Sure.
single
Yeah.
piece of our economy.
Well, gas is going down, Bill.
Mhm. Way down. It's
It's not
I just-
$5 anymore.
I just paid
Come on.
$4.29 a gallon this morning.
But if we continue to try and listen, I'm in all of the above, but you can't just cut one off and start another,
Right.
because right now the other is not very reliable, and it's not inexpensive to operate.
Yeah.
And the question, I think Scott said, will wages drop? Yeah. The question is when? Because,
As soon as we
those-
have an abundance of employees.
well, it's that, but because what is that doing with those higher wages?
Mhm.
It's causing the cost of goods
Well,
to go up.
continue, and shipping costs too. I mean,
Mhm.
that adds a whole lot to it. That's going to be hard to reverse that,
Yeah.
I think.
I disagree with you.
Okay.
I think
Love it.
I think
Point, counterpoint.
wages are
You
sticky,
can't even say it.
and you can't once you can't put the toothpaste back in the tube.
Yeah, that's true.
However, they can find other ways to be more productive, so they
Mhm.
don't have to pay as many people.
Mhm.
Does that make sense?
Like more
I would agree with
automation
you
and-
if if we passed a law federally that the new minimum wage is $15 an hour, if that had happened, I would agree with you. However, that has not happened, and
Well-
wages are dependent on where you are.
Yeah, no, agreed.
And the federal mandate is 7.25 still, or 7.5 right there at 7. So is it sticky because it's double what the minimum wage requirement is? I'm not sure I'd use the word sticky.
Good,
Again,
that's good.
it's a lot like real estate. It's location.
Yeah.
It is location
And
driven.
when we end up, and what the Fed is hoping for is that we have a higher unemployment rate,
Sure. Yeah.
because they're trying to take demand and get rid of it, or at
Mhm.
least lower it, and that's how they cure the inflation.
Yeah.
That's a sticky question. Thank you. But they're trying to do demand destruction right now,
Mhm.
and that's going to cause unemployment rates to go up, which means fewer people will have jobs, which means there won't be as high a demand on increasing wages.
Yeah.
At that point.
And to clarify, no employer is going to say, "Oh, now instead of paying you $15 an hour, we're going to lower you down to 12."
Right.
Right.
That
They're just
does-
gonna
That doesn't happen. Either
do
you have
they're gonna get you out.
turnover, and that person leaves, or
Right.
you help them leave,
Yeah.
and then you hire in at a lower wage.
Yeah.
Or the other side of it is the wage appreciation just becomes stagnant,
Hmm.
and that way it allows the cost of goods to catch to lower,
Which may be the 2025 number.
might
you know?
be.
And
So,
you get back to contract employees. That's where a contract employee started anyway, as wages were going up. And I don't want to single out any particular company, but
Go ahead.
Bank of America used to do that all the time. They
Yeah.
would eliminate certain departments or eliminate people in departments. They would lower them, but then they would end up, those same people would get jobs with contractors that were doing the same jobs they were doing before, but now they're working with another company who is under contract with Bank of America,
Yeah.
Yep.
making less money.
Yeah.
And they didn't have to pay them benefits and that kind of
I
thing.
feel like you just proved my point.
Well,
Yeah.
I'm saying wages are sticky, but
Yeah.
there's other ways to make them less expensive for the
Less sticky.
Yeah.
less
I wonder
expensive for
too
the
what
companies.
how higher education is going to come out on this. Because to go to college now you have to take out a loan. It's pretty sad, but it's almost imperative that you borrow money to go into college unless your parents have been able to save money for you or you've worked to make that happen.
Or you don't go.
That's right.
Yeah.
And I hate that they're considering this $10,000, or they might have already proved it, reduction on what's owed on college education. I hate that they're doing that. We're teaching people not to be responsible, but the college tuition should come down. I don't know that it will, but I do believe there are a lot of people that will be coming out of high school learning trades rather than paying those high college prices.
There's a senator
I hope.
that is introducing a bill that wants the colleges to pay half that bill and also be more open about the income that their students after they graduate are earning and that type of thing. And one of his comments was that he's tired of the universities charging extortion amount for tuition while teaching stupid stuff that has never happened, like men getting pregnant.
Yeah, that's a good one.
Now, I don't know how far that will go through, but at least they're bringing it to the attention. All right, so we're
I know we're close. We got to get moving.
we've been
Sorry.
rattling on about the breaking news now
Yeah.
for almost the entire session.
Yeah, we're
So
going to solve the world's problems.
what's financial freedom to you, Jonathan?
What is financial freedom to me?
Mhm.
Man, that I can just sum it up in it is appreciation, depreciation, and cash flow. Like that is what financial freedom is to me. What do I mean by that? It means I was having a conversation with a friend today, and
You have friends.
I do have friends,
One.
at least one. Yeah. They'll never admit to it, but we were talking about how the credit unions are being saturated with more and more money because now the savings accounts are paying over 1%.
Mm-hmm.
It's like, what, they're paying over 1%?
Wow.
And that's one of the things. I think I used the word stupid money, but
Yeah.
no, I'll keep with it. The stupid money
Yeah.
puts all their money there because I can make 1%. It's been paying 0.25 before, but now I can make 1%.
That's right. That's right.
And inflation is how much? Like you are losing at a negative 8-to-1 ratio.
Right.
So how about don't do that? Because you're giving them free money to lend out, which on the lending side, people love it because that's what we were talking about. Like friend, he would use their money to buy multifamily. But I guess I'm getting a long way. Like, don't put your money there. Put it in an asset that appreciates over time, allows you to depreciate on your taxes for capital expenditures, and then also gives you cash flow.
That's right.
Like, if you can cover all of those things, you will outpace inflation. You will outpace the stock market, and you will be financially free. Now, it's not an easy road. I was having dinner with a guy the other day, and we were talking about how expensive it can be, especially right now, to own real estate and stay in it and not just sell or become a wholesaler or what have you.
Taxes are up.
Taxes are up. All the, they've reassessed all the values. When they won't be reassessed. What they have to do every 5 years.
Yeah, it'll be a while.
They won't be doing it anytime soon.
Yeah.
Right.
So
Yeah.
those taxes are going to stay high.
Yeah.
So it is expensive, and it is difficult, and it's not the easy path, but it is the one that leads to financial freedom.
I agree. So for me, financial freedom is one sentence: my money working for me instead of me working for money.
Yep.
That's the bottom line, and which is really what you're talking about.
Yeah.
I will never retire, and let me knock on wood when I say that. I have no intention to ever retire and walk away from working. I enjoy it. I've got like a
And we
serious.
like having you around.
Well, he must want something. So I love real estate. I have a serious passion for real estate. All that entails real estate, notes, rentals, self-storage, apartments, whatever it is. I love everything about real estate. It's just a passion for me. I don't ever want to stop learning more and being involved in the art of the deal, which is my favorite part of real estate. I don't ever want to stop that. But what I do want is the opportunity to say, I don't have to do this if I don't want to.
Right.
I want my money to work for me. I want to be able to go to sleep at night and know that I've got money that's being deposited into my account.
Yeah, and you mentioned the art of the deal. I mean, that's one of the pieces of financial freedom is that when you do have that knowledge base and that drive, that determination to do deals and that desire, like you need the space to be able to do so. So part of that freedom is having the space to analyze deals, to look at them, because you can't analyze and look at deals and close them if you're out there scrubbing toilets or cleaning out your rentals.
Exactly right. That's exactly right. And a lot of people will say that part of their financial freedom is being able to leave their children a legacy. But
they can build their own legacy.
And you know what? I think I must be a terrible parent because I don't feel that way at all. I mean, sure, I would never want my kids to suffer, but my legacy to them is teaching them what I know, teaching them what I do, and their relationship with Jesus Christ is, the number one legacy I'd love to leave with them so that they're always seeking him in what they do. But, I don't want to leave a bucket full of money for them.
And I go back to, Scott Patton, who's, running the show for us. One of the things that he said was, it's a saying, I think in Canada, short sleeve, long sleeve, short sleeve. And, the short sleeve is the guys out there working in the fields or what have you, doing manual labor. And then they build a legacy, and then their sons become long sleeve. They work in an office. They get soft, whatever, what have you. And then the next generation is short sleeve again because they had a soft generation prior.
Yeah. Good point.
You want to instill more than you want to hand out dollars to your kids or assets. You want to hand out
give them a fishing pole.
Give them work ethic and the ability to do things.
That's right.
All right. So for me,
We're out of time.
Too bad.
Close it up. We
Well,
need to
that's
get to
it,
the
folks.
airport.
Financial freedom for me is doing what you want, with whom you want, when you want, and not have to worry about where you're doing it. You know what I mean?
At the bar.
You can go anywhere you want to go and not have to worry that you're not being able to maintain that same lifestyle.
Right.
And with real estate, well, here
I've
here's
heard transient people say they do that.
the stock market game right now. If you're a stock market person, here's now that the market is dropping,
Mhm.
here is the defensive play. I'm going to get into treasuries because the person that loses the least is the winner.
Yeah.
Now, how is that investing? That is just grasping on to not losing. When you're in real estate, you have an asset that continues to go up in value and it's paying you an income. And your whole goal there is to have essentially a balance that increases in value
Mhm.
that you can live off of at the same time and keep that same lifestyle.
Right.
And you
Yeah.
want to do it as passively as possible so you can do what you want with whom you want, when you want, and where you want.
You know, just finished up a book called The Mandibles, and it's about.
Was it a book about dentists?
It was not. You know, it was their last name, not their jaw. But
What was it called again?
The Mandibles. So
the Mandibles.
Yeah.
The Mandibles.
yeah, The Mandibles, and it's a dystopian book, very well written around economics. It's a lot of economic professors are characters in the book, but basically it's taking you through kind of what we're going through now, and then extrapolating that to like the worst case scenario,
Yeah.
like the fall of our economy.
Wow.
Which in the book is because of some external forces as well as internal forces. But the thing that struck me in the book was with 30 and 40% inflation rates that they're talking about in the book on groceries and what have you, the only winners, or I don't even say you can say winner, the only people who survive at a semi-comfortable rate are those who own real estate and those who own energy and those who control the produce.
Interesting.
Those are the only people who are doing okay and just okay. But again,
So I got the chickens and the real estate covered.
yeah. Well, because
You just need to get the energy part
That's right.
figured
Yeah.
out.
I need
real,
more
real
energy.
well.
it's a really good book. I've been listening to it on Audible. I listened to it a good portion of it driving 6 hours, and I remember it sucks you in so well. It makes you feel how poor and awful things can be. I remember stopping at a gas station after listening to it, and I saw that the gas was like $3.90 something a gallon. I was like, I can't afford this. How am I going to do this? And they're like, oh wait, no, I'm not there. I'm here.
I'm not in the book.
Oh.
All right, folks, we're heading out to. All right, yeah, we got to ask the question. Our question for this week is: would you like to take it?
Yeah, sure. So with the stock market in, let's say, turmoil, because it's right there,
Yeah.
turmoil. Tumultuous times. Is your money management in alignment with your goals? We'd love to know that. I know a lot of people who have talked. Bill, Wendy, and I, we've all talked to people who are moving money out of the stock market, which I understand. 6 months ago would have been better, but they feel that way too.
Yeah.
But, what are your goals, and are you moving money out of the stock market? Are you keeping it in? Are you moving into other assets?
What's
We'd
your
love to
plan?
know.
Yeah.
Look,
What's your plan?
you can't win when you're trying to time the market. Not too many people do.
Right.
Same thing with real estate. You don't time real estate. You get in it, and you get in it at a price that makes sense for the numbers.
Yeah.
Same thing with the stock market. You get in if the numbers make sense,
Yeah.
but you certainly are going to have less fluctuations,
Mhm.
and you're going to have an asset that continues to grow in value in real estate. So, folks, I'm going to switch you over here to everything about me. Anyway, it was great having you on the show. We are Carolina Capital Management. This was the Real Estate Investor Show, hard money for real estate investors. Like I said, we're Carolina Capital Management, and we are private lenders in the Southeast for real estate investors. If you have a project you'd like to take us, you'd like for us to look at, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor
And you want to get out of the stock market.
looking for passive returns, go to the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, and hopefully we'll see you guys in Houston for Quest Expo this weekend.
Yep.
Don't forget about Wednesdays with Wendy. See you next week.